Hey everyone, welcome back to the channel. I'm Doug the Retirement Guy, and this video, we're going to do this one fairly quick for you today, is QQQ versus QQM. The same Nasdaq 100, but one clear winner. QQQ is Invesco's QQQ Trust, and QQQM is Invesco's Nasdaq 100 ETF. So we have one, I call it one clear winner of these two funds. And this really came from people asking questions when I laid out my three bucket portfolio that I said, you could use QQQ as as your foundation fund. You can use it to, help grow your markets and so on. And I got a lot of people coming back to me and saying, I prefer QQQM and all different answers. And I'm like, what is the big difference between the two particular funds? So I thought I'd quickly break it down, give it to you, and give you a good insight of what's going on. Before I do, I got to do my usual shout out to all of our Patreon and our YouTube subscribers. Thank you so much for being part of the family and supporting what we do. And the other one is, I have to again say, guys, you're blown away. I'm blown away by the excitement and everything that's going on with the Retirement Made Easy coffee mug. Guys, we had to reorder again. It's amazing of what you guys are doing and supporting the channel. So if you want one of the coffee mugs, it's real simple to do. I made it even easier yet. Go down in the descriptions. You can join us in Patreon and get them there, or you can easily just go right to the website. Click on the website. It'll take you directly right to the mug, and they'll get that coffee mug out to you almost literally same day. So it helps support the channel. I believe it's like, I think $18 total delivered to you. Unbelievable, neat mug. A lot of people have bought it. Thanks again. Let's get into today's video. Important disclaimer, the content is for educational and entertainment purposes only. It's not financial advice, and the presenter is not a financial advisor. Investing involves risk. Income is never guaranteed. Past performance does not guarantee future results in any way. If you need help, always contact a financial licensed financial professional, as we are not. So we have two ETFs, one index. They're a shared benchmark, Nasdaq-100, both Invesco branded. They're both Invesco QQQ and Invesco QQQM. They track the same underlying index. This index is comprised of 100 of the largest non-financial companies listed on the Nasdaq-100 stock market, offering a concentration exposure to the innovation and growth, primarily of Apple, Microsoft, Nvidia, all the big tech side. So it's very heavily built on the tech side. So realistically, what the daily returns of QQQM and QQQM and QQQ are described as virtually identical. And that was the first thing I ran into these funds when I heard people say, I'd rather have QQQM. And I'm like, why? What's the difference? And virtually these two, like I said, are identical across the board. So I broke down, so let's take a first quick look at this. Expense ratios, 0.18 to 0.15. Okay, maybe a little bit cheaper, QQQM. Share price, 737 to 304. Okay, about half the price. I like that. Total assets under management, 481 billion to 98 billion. I mean, yeah, that's a huge difference between the two, but I really can't argue with somebody when they've hit that 98 billion, almost 100 billion dollars. So I'm like, okay, I can't argue anyone with that. 16 million shares to 5 million shares. Then I started doing the options of liquidity. And with them having the top five, QQQ gives you an enormous amount of opportunity for options available. Even though it's the same funds, it's the way the fund was built. Now, the QQQM is not really built for the option category. Not saying you can't do it, but it's really not built for that. The launch date's March 19th, October 20th. So the best use case, QQQ is actually used by active traders and for people doing options. That's why you see so many people with the covered calls. across the board using QQQ. But QQQM was bought and made to buy and hold investors. So Invesco was smart enough to see that they want one item that can be traded heavily by the industry, by the markets, a lot of ETFs, and another one they were going to say, hey, let's help offer this to our customers, our customer base, who just like to buy and hold. And that's why you see a big difference in the pricing between the two. Okay, and that's why you see the assets under management, because so many ETFs are buying into QQQQ that are not buying the QQM because it's not built for it. So I went deeper. I said, man, this is really confusing to me. I got to go deeper into this. And same thing. Assets, we just talked about. Expense ratios, we talked about. Distributions. Dividend yields are virtually identical, 0.42. So really, these are not dividend items. They do pay some from what they collect from the companies, but they're really designed for, I have to say, growth. So I look at the pricing again, $705 to $726 range on QQQ, and then QQQM is $290 to $299. So I'm like, yeah, it's a cheaper fund. Look at the results. Since inception, it's realistically I'm going to say 20 years difference between these two funds. Okay, 20 years difference. So inception's going to be some big things, but let's look at that 5-year mark, 16.19 to 16.11. 1 year, 33.39 to 33.41. Year to date, 16.89 to 16.89. These two carbon copy each other in performance, operations, and everything. Okay, so I figured if you could push this thing out 10 years, you would watch the numbers would match up. So we have apple for apple. We have two identical operating funds. Oh, there are some little tweaks inside of it, but overall, you have an apple for an apple giving you the same exact results across the board. So why, you ask, why would QQQ cost more? Despite tracking the same index, QQQ maintains its 0.18 expense ratio. This premium is justified by its status as one of the world's most liquid financial instruments, serving the institutional needs that go beyond simple retail buy and hold strategies. So what does that answer you? That says that little 0.03% additional is what they're charging those additional institutional people. So they were able to save money by going with QQQM, giving the same results, but just saving a little bit of money. This is the pioneer of the U.S. index ETF markets. It's unmatched liquidity preferred by institutional traders, and it's got a high trade volume, which minimizes the execution costs on large scale active orders. They're looking at over 16 million shares a day being traded. So this one has an options dominance, and it's structurally involved to fit exactly what we're talking about. Now, why was QQQM built? Now, this thing launched in October 2020. QQM serves as Invesco's acknowledgement that the buy and hold investor in the legacy QQQ may be overpaying. Could believe that? A company actually worrying about us and talking about us, that they're taking people who are buying and holding are overpaying for a product, that liquidity that they don't need. It provides the identical Nasdaq-100 exposure, but is structurally optimized for long-term retail accounts. So the retail optimization, the lower expense ratio, and keeping your share price more at what they call the entry barrier price, keeping it down, almost literally half the price of what you're getting from the QQQ. So the share price is a huge factor. And, why would you think the share price would be so big? Because just think about this. If you're able to buy I put it up here as $250 a monthly investment, buys roughly 1/3 of QQQ, where QQQM's lower price makes it easier to accumulate full or near full shares, strictly because the price is literally well over half the price of what QQQ is. So if you're an investor that's saying, hey, I'm going to build my foundation fund and I want, the Nasdaq-100 to be part of it because I want that big growth, well, QQQM, one letter makes a huge difference that you can get into for a lot less money. While Fidelity and Schwab support fractional shares, many 401k brokerage windows and older IRA platforms don't allow fractional shares. So again, you would have to wait almost 3 months before you could buy one share QQQM. When today, looking at the prices today at $250 a month, maybe you gotta wait a month and a week, and then you could buy a complete share. So QQQM provides that superior contributional sizing flexibility where fractional ETFs are supported. So pricing, huge for the same thing. It's almost like we're buying a no-name brand from a brand name. So where's QQQ, or excuse me, I keep adding an extra Q there. Where does QQQ still win? Well, it's the top U.S., I'll have to say top 5 U.S. options trading market. SPYI, SPYX, QQQ, Tesla, NVIDIA. These are all huge option-based funds. Okay, so really where it wins is that in industrial and in institutional grade strategies. Its income generation by covering covered calls require a high stake and high volume in the premium capture. They would need that complex structures. The calendar spreads, the digital spreads rely on deep liquidity across multiple explanation cycles. So it's really that QQQ is built for someone who's going to be selling options based all around options side of it. Now, switching rules. If you're into QQQ and you want to switch over to QQM, there's a few things that you need to learn about, and that's the tax advantage accounts. Rebalancing or switching holdings in an IRA, a Roth, or a 401k, that brokerage window has immediately no tax consequences. So there's really no friction there. The friction comes in is that taxable brokerage accounts. Selling QQQ triggers capital gains tax on appreciation. An immediate tax bill may overweigh those basically that 0.03 savings that you're having. So in scenario 1, that significant gains, holding and pivoting strategy, keep existing of your QQQ, avoid those taxes, and just switch everything over to the new QQQM investments. In B, minimal gains or losses, if you're looking at saying, man, I don't have much here, complete the switch. If possible, from recent or slow sales or losses, tax harvesting can always be a big thing to it. Then you can step from selling QQQ and buying QQQM almost immediately, and it actually would help you on your tax side of things. And then the tax advantage is seamless. Just make your switch, be done with it. So what I'm saying here is I haven't seen a real reason other than buying for a lower fee and a lower entry point that QQQ is giving me anything exciting that QQQM has not. So the portfolio decisions, I've kind of put it this way. QQM is the accumulator and QQQ is your strategist. If you're not an active trader, if you're not looking for something that you're going to be setting up either your own option calls or doing some of that, QQQ is an industrial or institutional grade investment. I've learned from you guys out there on the channel. Yep, sky's not falling yet. I actually learned from you that adding just an extra little digit, an M behind my QQQ will make a big difference down the road. So QQQM is primarily a core holding. This is where we're going to put this into our foundation funds. ideal to buy and hold investors. So my verdict is really clear. QQQM is a clear winner for long-term investings. Less for your strategy depends on your extreme liquidity and the legacy of the QQQM options market. So basically, bottom line, guys, is you're buying for a smaller amount. You're paying less. It's more efficient in the cost side of it. You got only 300. It's actually, you can see now, I'm at $304 a share. It's less now. And you can get more shares for less money, which means you can grow even faster. Guys, I hope you like this. As I know, it was a quick one, but it's just learning. I learned from you. You learned from me. It's an even trade-off across the board. Let me know in your comments below. And also, if you like, hit that like button.